Good afternoon, everybody, and welcome to this edition of Ask the Experts. My name is Carl Kapalunga. I'm the market analyst over here at Think Markets, and it is a pleasure to be with you as we really throw the conversation over to you and get to the stocks you want to talk about. Now, that would ordinarily be the case. This is a post-record of a session we did earlier in the day where we did have live interaction. Unfortunately, I forgot to click the record microphone button, so I had lots of vision but no sound. So I'm going to redo it. Apologies if you're in that live session and you were expecting the exact replay. What I will do, however, as a bonus is get to a few questions we didn't get to a couple of weeks ago that I did promise we would cover, so fulfilling my promise there. And as an added extra bonus, we'll also look through my top ASX stocks for today based upon my long scan shortlist. Well, let's get started with the first stock selection from Hamid, and he's asked for MCR, which is Mincor Resources. Overall, firstly, I should say what a lovely long-term trend. And if you're new to my analysis, the long-term trend zone is this dark green zone here. It can go orange when it's getting a bit neutral, and it can go a dark pink when it is a downtrend. We'll see that in a second. We also have on screen our moving averages, which represent our short-term trend. That's the light green zone. It can go orange when it's indiscriminate, and it can go to a light pink color when it is a downtrend. What we tend to find is that on the way up, whether it's short-term or long-term, those zones tend to support prices. So we've probably all heard of this idea of support resistance, and many people will draw horizontal lines on the chart. You can see some of the horizontal lines I have here representing various support and resistance points, but we call these static support and resistance. They don't move. Moving averages, as the name suggests, do move, so we call these dynamic support and resistance. I use them in the same way as a lot of people use those static levels. And as I said, on the way up, we tend to find that this light green zone acts as a bit of a cushion, this invisible hand holding prices up. That is until, of course, we get a break close beneath that zone. And then we tend to find, once we're beneath that zone and we're in that short-term downtrend now, it tends to act as resistance to prices moving higher again, of course, until we close above that zone. Then there's a little bit of a wobble through here, but eventually, we close above the zone, perhaps even come back, retest it. The trends change to light green again, and up we go. We also see that reflected on the longer term trends. So we can see here where we've got the long term trend zone acting as dynamic support, and it took a few months really for this one to hold that support and then move higher again. What I will do just very quickly, just to illustrate the point, we'll go back far enough. Hopefully we'll find one in the not too distant future. There we go. We've got some scratchings from a previous webinar where we're talking about this long-term trend zone. It's now dark pink in color, acting as this dynamic resistance pushing prices down. Of course, there you go, until we close above it, maybe make a higher trough again, and then we can change that long-term trend from down to up. When we are in an uptrend, and look, let's for all intents and purposes call this an uptrend just to illustrate the point, it is acting as support until we close beneath it. The scratchings showing here, maybe we close beneath it here, we have a retest, we fail and come back down again, and that's how we go from the long-term uptrend into the long-term downtrend. So a little bit of a background on how to use, I guess, what you're going to see on my charts throughout the rest of this session. Putting it all together, what's happening now? Well, we are in a short-term uptrend, only just because it is starting to squeeze together. You can see it's really contracting there. Hasn't turned into a downtrend yet, and that is a good thing. Long-term uptrend, still fantastic, no problems there. The other thing I do like about MCR at the moment is lots of little white candles coming in here towards the end. That's encouraging, telling me that there is some accumulation going on in the system, and that's starting to counterbalance the negativity from really a cluster of black candles in here, telling me that there was a bit of supply or a bit of distribution in that level. So look, without a doubt, certainly we have gone from a nice uptrend into more of an equilibrium pattern, but there are some encouraging signs towards the end. What would get me really excited here is if we maybe pull back a little bit here into sort of that 130 zone, where that short-term trend is going to be, and then start to push higher. And maybe 1 or 2 or 3 even white candles through here. I think that's your trigger if you don't have this one to start to put some money into it. Certainly if you've got it, hold on to it. I don't think there's any reason to sell it. If you don't have it, wait for that little indication that I mentioned before with those white candles before you do buy it. Okay, next stock is BHP, and this one's for Grant, but I'm sure many people would love a technical reader on BHP at the moment. Unfortunately, the technical picture is largely skewed, distorted by the large dividend, and I'm pretty sure it was around about here that we got just over a $2 dividend from BHP when you obviously add in franking credits as well. And it is not necessarily a supply-demand event that's causing that fall. So in many cases, you really should take this part of the chart and shift it up by that fully franked dividend. And it does then make it difficult to pick off key levels of support and resistance from the past, and also to use the moving averages. But look, let's give it our best shot anyway. What I would suggest is that, dividend or not, there was a major impact from the collapse in the iron ore price, and that has been the main driver of this price decline from in the mid-50s when, to be fair, it was looking very good. We talked in the last case study about this long-term trend zone, and we did say that often we will see the price break below that zone. Look, often we'll see the price supported at that zone. Many times we'll see the price hit that zone and bounce back up. But often when the price does break below that zone, the key factor in determining whether the uptrend can re-establish itself or a new downtrend begins is what happens when we test that zone again. If we come back up, hit that zone, and then fail again, that is usually a very powerful indication that we are moving out of that long-term uptrend into a new long-term downtrend. And it certainly appears to be the case here on BHP. But again, part of this is that dividend payment. Look, I think even if you add back the dividend, we were going to break below that level and change that long-term uptrend into a long-term downtrend. And look, that's where we are right now. So we go from a picture in the past of BHP where we are, we're buying dips, the short-term trend is offering support generally, not all the time. I mean, there's a little one there where it didn't, but generally into one where unfortunately you may need to think about selling into rallies. And if we try and find some points where we could find some resistance here. Look, I think an obvious one is going to be around about that $40 level. It's a key psychological level. There's potentially also a little pressure point here on that little trough, and then there's a pressure point here at the point of that peak and this other little trough here. So it's going to be hard going, let's just say that, for BHP to recover from here. Look, I'm optimistic it can. I wouldn't necessarily say these candles and this price action is setting the world on fire in terms of making a nice low. What would a nice low look like? Well, let's have a look at the other nice low. And we saw this this low made here. I wouldn't say it's anything really completely different from what we've seen, but what we need to see is some higher troughs being put in and then some breaking of some of these peaks here. So let's just say something that resembles this, but instead of failing at that level, coming up, testing the next level and the next level again. So this is the sort of price action we'd like to see before we have any confidence that it is once again safe to go in and buy BHP. Look, let's drill this down to a buy, hold, sell on the technicals before we go and look at the fundamentals. Look, I would say, look, if you're a really long-term holder of BHP, self-managed super fund stuff, you're probably not best served by selling now. I think, let's face it, we've had a big move. So I think you just want to wait and see and look for some of these signs that we can make a low here before you were to add to the position. But certainly, if we got below 35.77, that's when we're going to start to panic. I don't think we're there yet. If you don't have BHP, look, it's a very similar story. I think you want to see some of these high peaks and troughs come in before you did. Do I need to sell BHP? That's a tricky one because, again, without more evidence, I can't tell you whether we're rejecting higher levels yet or we're embracing them. So I'm not always going to be able to give you a definitive answer based upon the charts, because sometimes the charts aren't definitive. Let's see if the fundamentals are giving us any more clues. Heading over here to our Thomson Reuters Refinitiv Icon dashboard. And what we have here is really a feed coming from Thomson Reuters. Refinitiv Icon is the product. For broker estimates, so their estimates on revenue, gross income, EBITDA, so on and so forth. And for the bigger companies, we certainly have lots of estimates. For some of the smaller companies we might cover today, there are fewer brokers covering. But we can see there are lots of brokers covering BHP. We've got 3 at strong buy. That's impressive. 5 at buy, 4 at hold. No sells, no strong sells. That's quite interesting, given how much it's fallen over the last couple of months. So no sells. Well, somebody's selling, and maybe that does shed a little light on some of these broker recommendations. You do have to take them with a pinch of salt sometimes. They are very much buy-side oriented. Let's have a look at the broker's average target, 47.09, providing about 23.7% upside. So on the face of it, look, they're still thinking BHP's pretty cheap here. Having said that, many of them are expecting BHP's earnings to contract on average about 14% per annum for the next 3 years. Keep that in mind. And looking at some of the valuations here, well, BHP is trading on about 7.2 times current year's forecast earnings. It is historically now at 8 times FY21 earnings, and we are expecting the PE to rise as earnings contract. And the expectation there is that some of these high commodity prices, those gains are short-term in nature or medium-term in nature, and in the longer run, those commodity prices will settle down, and that will put some pressure on BHP's earnings. So all of that is really coming from Refinitiv Icon and their broker forecast. This little bit here is what I can do, and it just uses a little bit of some spreadsheet magic there and take some of these forecasts, and I can put in some of my assumptions to get a feeling of what I think is value for BHP. What is fair value here is this is the main line we tend to be looking at here. The first decision we need to make is what PE ratio we're going to hold BHP to. We've got a couple of options here. We can go for a dynamic future PE, which basically takes the median of all of the future forecasts that the brokers have made for BHP's PE, or we can go for a historical, which is just dynamic F, and that goes for what it has done on the past. So let's start here. Should BHP be valued based upon its historical PE, or what brokers are feeling it's going to be in the future? Typically, I would go with the future one. I think that's where the market's heading. But because BHP is such a cyclical stock, and you can see that the trend in that PE is heading up over time, and probably back to more quote-unquote normal levels, and if we take that out because that's an abnormally large year of earnings because of what the iron ore price did, and I think we're trending, you can see a trend there, back to, let's go with those 3 years there. And I think the market's kind of telling us that if we take the cyclical nature of this business into account, that we should probably be valuing it on around about 14 to 15 times earnings, okay? And that, I think 10.3, the future one in this case, is probably not the most appropriate way of going about things. Incidentally, it does change it quite significantly, doesn't it? I mean, if we go from holding it to a 10 PE, it looks overvalued on that basis, like significantly overvalued. But I don't think that's appropriate. And I don't feel that that's what the market's actually using, to be honest. And when we get to here, it starts to make more sense. We see this picture of a company that is, I think, a great company, but going through, a cyclical boom, and I wouldn't call it a bust necessarily, but a cyclical potential downturn in earnings. Let's treat it at a 15.4 times yardstick, and let's say that I'm happy to leave it at low risk. I don't think there's any reason to change that, although some people might argue that given the nature of the cycle, moderate risk is more appropriate, and that actually gets us pretty close to fair value, and that's interesting in itself, that if you change that to moderate, we get to fair value. And all that does is it changes our discount rate. It changes the degree that we discount earnings back to current values. So future cash flows discounting back to present values because of the time value of money. So we're using a high interest rate to discount this back if it's a moderate risk compared to, say, if it's a low risk. Look, I reckon that's the best place to be, because I think we're pretty close here, aren't we, on where the brokers are. So I think we can take some comfort in the broker recommendations. We can take some comfort in that. Looking at the BHP share price right now and keeping in mind that chart that we saw, we're probably closer to the bottom of this move, okay, than we are to the top. So there's some encouragement there. I don't think BHP's expensive at all at these levels. I think it's on the right side of fair value, because even if I do say that there is some risk and uncertainty ahead for commodity prices, then it's still okay on that basis. And we can debate for hours as to whether there is risk and uncertainty for commodity prices. Hey, there's always risk and uncertainty in commodity prices. That's the cycle. But I think it's more about whether there's risk and uncertainty in the brokers' estimates. And I don't think that their estimates of a contraction of 14% on average per annum is excessive, and that's kind of the key there. I don't think it's excessive. I think it's probably pretty close. If anything, I think it's actually probably a little bit conservative. In which case, I think low is the right rating, and I think that is the fair value for BHP. Okay, we got there in the end. There is a question a little later on. I might as well address it now because it talks about the spreadsheet. Anthony says, is this spreadsheet for sale? And the answer is no, it's not for sale. It is obviously a hybrid of this broker data we take in, and then obviously the Think Markets intellectual property here of how we do these valuations. And there would be little point in me giving you the spreadsheet, because you would need to know not just how to use it, that's one thing, but how to come up with what is a reasonable set of parameters to I guess get a sensible valuation, and that's really just only going to come from experience. So I could give it to you, and if you don't have I guess that experience, you might not be able to make it work for you anyway. Okay, next up is A8G, which is Australasian Gold Limited, and this one is for Grant. Look, it's not a lot of price history here because we don't have a long-term trend zone. It's not one I've heard about, so I will simply just do the technical analysis here on what I can see and say that it does look good. I mean, we've got this wonderful short-term uptrend. We do look like, we're making nice high peaks and high troughs, although there is a bit of overlap in here, and I would suggest to you extreme volatility on this one. So I wouldn't say it's necessarily the biggest or most liquid of stocks out there. But look, I think it looks very, very solid around here. A little bit concerned about this last candle, but having said that, it's not a great day on the overall market today. Probability is of that candle that we probably will see a pullback into these low 40s here. But as long as this short-term uptrend holds, I think I'm pretty happy to continue to be a holder. I don't think I'm a buyer. I just don't know enough about it. And there's just not enough price history for me to make a really confident technical analysis call on it. I won't go to the fundamentals on this one because I don't think we're going to have any. What I will do, however, is get on to today's Ask the Experts stocks. And we're going to kick off with Blackmores. And this one is for John. And on the face of it, straight away, I can say it looks very, very impressive. We do have this relatively new long-term uptrend in place. Once again, we can see, like clockwork, how the long-term trend, when it is in a downtrend, does resist prices. But once we can close above that, it really comes down to, well, what do we do next? I mean, it's great we've closed above it, but then we want to see some signs that we can hold above it. That's the other key level. And what was really neat about this one is just the white candles, the accumulation that came in at that level, at this long-term trend zone. You can see how important it is there. And then when we started to make higher peaks and higher troughs, which actually, to be fair, happened around here. But I think once we broke above this level here, let's draw a little line there, that really was, I think, the catalyst for higher prices. So a very pretty picture here on how long-term downtrends swing back into long-term uptrends. We're seeing some support here at the short-term uptrend zone. That's very encouraging. And we're also seeing lots of white candles, and that's really, really important for me to see lots of white candles on a chart, because it tells me there's lots of accumulation in the system. We are seeing a little bit of a pullback today. Look, the last couple of days haven't been great on the broader market, so I wouldn't read too much into this. But those candles do indicate a bit more of a pullback is probably likely. It wouldn't surprise me if we had another go back into that short-term trend zone and then just continued this sort of gentle build-up of demand that we're seeing more recently, with potentially a breakthrough that $100 level somewhere in the hopefully not too distant future. By the way, no surprise, it stopped at 100 or 99.80. It's a big round number, a big psychological level, and we're always going to see supply at those levels. We often see supply when we get back near them, and we do need to do that time of slowly chipping away at that supply before we can get through. Buy, hold, sell. Look, absolutely a holder if I had it. I can't see any reason at all why you would sell this one. Would I buy it? Maybe not just yet on the basis of those last two candles, which are a little bit bearish, but certainly if I did see a nice candle coming in here around that uptrend zone, that short-term uptrend zone, then I would get quite excited by that prospect. And what it would look like is something like this. Let me draw it for you. The exact candle I want to see first, and you probably know where I'm going on this one already, but it would look like a candle like that in that zone. So that's what we're looking for there. Type in Blackmores into our fundamental analysis tool. Just need to make sure all of the key data points line up, which they do. I don't think we have the same sort of issues here with BHP on this one, and I will default to my preferred dynamic F, which takes the median of these numbers here, but I don't think they're really contradictory to the historical ones. Low risk, I'm pretty happy to go with low risk on Blackmores based upon what I know about the stock. I can't see anything else which is causing me issues there. Let's have a quick look at the brokers though. We've got 2 buys, 4 holds, 1 sell, 1 strong sell. That's a little concerning. I don't like it when, they say beauty's in the eye of the beholder, and we've got a couple that don't like this one. The mean estimates are a bit lower than current market price. Let's look at the broker's growth estimates. Pretty healthy at 32% per annum and fairly steady. We're not seeing major ups and downs here. I mean, there is a tail off there in FY25. But I'm happy to go with the numbers as are. Look, I think the target price is a bit low. I'm going to say fair value is at 113.81, which gives us about 17% upside. And based upon the technicals, look, I'm pretty happy with this one. I'd be happy to call it a buy based upon waiting for that little candle that I talked about. Okay, next one is Shaver Shop Group. That's ticker code is SSG. We might as well type it in here, and perhaps we can do this one the other way around, do the fundamentals first, then the technicals, and this one is for Bippen. Okay, numbers on screen at the moment. Don't think I need to change a whole lot of things here either. You could argue that the future PEs are pretty low. I think maybe we could jack up the PE target a little bit to reflect some of this historical PE. So let's change it to dynamic H, which would suggest that it's crazy cheap there. And because we had 7 and we had 13, let's split the difference, and that may well be the most sensible approach. And we're actually getting pretty close to the broker's estimates there. Look, it's very important to point out that fundamental analysis is an extremely discretionary science, okay? And you've seen some of the some of the assumptions we need to make to get a sensible valuation for something. And look, we're not going out on a limb here to say that the correct target PE is effectively averaging all of those numbers there. And we can see here the average is 10.89. Okay, so if I literally type in 10.89 in here, we get to actually 166, which is indicating to me that Shaver Shop, on the face of it, looks pretty well priced. Here. So if we went on an absolute worst case scenario, about 10% upside. But if we went on a fairly reasonable assumption set, then I would say, there could be up to 60% upside. The brokers are at 50%, albeit only the 2 of them with 1 buy and 1 hold. So let's see what the chart says. Looking at this, you would think that the chart looks very attractive indeed. Let's have a look. And it's not what you might have expected from those fundamentals. And hey, that's how the market works sometimes. They don't always line up. I wouldn't say that this is the most awful chart though. What I would say is it's going very sideways, which indicates to me that we do have supply and demand in pretty close equilibrium at the moment. And that's contrasts to the demand side market where we had more demand than supply, higher peaks, higher troughs, short-term uptrends, long-term uptrend, all looking very good until about April when things really started to level out. The other thing I would point out here on this chart, just for your own reference, something to keep an eye out yourself, is to look at these black candles, and there just seem to be too many black candles in there within that uptrend, and that indicates to me that there is a motivated seller working in this stock. So despite the fact that over a lot of this time the broader market's been going up, the stock has a very attractive valuation, there has been somebody that is seeing something else, something that they have a different valuation, they have a different motivation. Maybe it's an insider selling out, who knows. They're just in at a very, very low level and they're taking profits. But there is, whatever you want to call it, this invisible hand that is suppressing price at the moment. The big question becomes whether that invisible hand wins the battle, and they're so motivated with their supply that they push through the demand that's in there, because it's actually pretty well priced, or the valuation is pretty attractive, and we see a breakthrough here, and then you just have to wait really until the selling stops, until it has any chance of probably bouncing back up to where it is now. Or we see that the demand that's in the system, and we can see there is demand in the system holding it up in the face of the selling, whether it eventually takes over, the selling stops, and we push up and maybe go fulfill some of those valuation targets. If you want to buy, hold and sell from me, I would say if you had it, there's just enough. I mean, just squeaking in as enough to hang on to it. I'm going to get very nervous below 94 cents. In fact, I would sell some of my position below 94 if you haven't already sold some on the basis of this trend changing. Where would I get more excited? Where would I think it's safe to start to get in and try and get the rest of that valuation upside? I wouldn't do anything until we closed above 110, because that would re-establish certainly the short-term trend, but probably also re-establish the long-term trend. And if we saw something, that looked like this, where we held, so we went up, tested 110, because we know that's going to be a resistance level, held the long-term trend that was starting to turn up, and then pushed higher again, that next move through 110 would be the buy point. Okay, we're going to skip through the rest of these now. CXL, which is Calix, just technical on this one. I don't think we're going to have a lot in the way of fundamentals, but it certainly looks great. I mean, short-term uptrend is magic, long-term uptrend is immaculate, and the price action I think still looks pretty good. We are seeing a bit of supply in here at $6. Look, a little bit of a round number, nothing to be too concerned about, and on some pretty nasty days in the market. I think overall they're pretty minor in the scheme of things though. So 100% if you had this, hold it. I can't see any reason to sell it. If you didn't have it, look, just on the basis of the weakness of those last couple of candles, probably not a buyer today, but really just looking for a buy point down the track with some nice candles, and maybe into this sort of short-term zone as it starts to catch up, maybe around that 510, 515 level with the appropriate candle. And by appropriate candle, the one that I like to see, it would look something like that in that zone, then that would be an attractive entry point if you can get it. So just keep an eye on this one going forward. The next one is RNU, which is Renascor Resources. Look, a pretty good short-term trend. It is under some pressure at the moment, but a very, very well-established long-term uptrend. And we can again see how after these pullbacks, this long-term trend zone does support prices on the way up, and also, to be fair, how the short-term trend does support prices. We've talked about this in today's session before. The great risk is once you get below either the short-term or the long-term trend, it doesn't matter which one, but once you get below it and then you start to falter, you start to fail to reclaim it, it goes from support to start to act as resistance. That's when you can see a more protracted pullback. And what is possible here is that we do complete this move lower, reject this short-term trend, and then start to move back into this long-term trend zone to potentially test that somewhere down the track. And I'm not sure if that's a game that you want to sort of play. And look, again, if you're a longer-term investor, you probably put more faith in the long-term trend. If you're a shorter-term trader, then I think there's enough evidence here to potentially lighten some of the load on this little rally. And if you sell 1/3, you've still got 2/3 of your position for potentially a long-term hold. But at least you may be just lightening some of that risk just on the basis of it not getting through. Let me tell you what would look great if it can do this. If assuming that we don't see a black candle tomorrow, you might get something like this. If it's a better day, then that would tell me that that my fears are unfounded, that we're not going to reject off this level. In fact, we're just going to move back above this level and then back into the uptrend. So, today, next couple of days, pretty crucial, I think, on Renascor to see what's going to happen next. All right, changing gears a little bit for the next couple, we are going to check out some cryptocurrencies. The first one is chiliz, which honestly I had not heard until Hamid suggested it in today's session. I did do a little bit of digging into it, just a little, and they allow large sports organisations and codes, UFC is one example, to create sort of fan-based tokens to create your sort of interest and rewards and loyalty around that brand. Look, regardless of what they do, supply, demand always comes together to create price. And when people are really excited about a project, and, you know, looking at here, you know, hey, we get lots of white candles, don't we? Because there's lots of people wanting to get in and very few people wanting to get out. We do eventually get to a point where the getting out is just too good, and we start to see higher shadows. Look at these higher shadows here, black candles. Look, where are we now? Well, if you squint, there's still a long-term uptrend. The short-term uptrend is I was going to say short-term uptrend. It's actually, I think it's still a short-term downtrend through here. I think it's a short-term downtrend, but it's gone neutral. Bottom line is it's very, very flat. The last few candles don't have any great redeeming features in terms of they're not showing white bodies, not showing lower shadows. Peaks and troughs, look, if I squint, maybe we are moving back into some higher peaks and higher troughs, but we've got a massive overlap on the last couple. So clean price action, I keep saying this, clean price action looks like this. This is what you want, okay? This is the 100% scenario, and it's good because, you know, past points of resistance we expect to act as future points of demand. All right, so if we've got resistance there, let's call it demand slash support. Okay, and let's change this one to supply slash resistance. Okay, so past points of supply, past areas of resistance should in the future act as future points of demand slash future points of support. And we can see here that people were falling over themselves to get in before that demand or the expected demand exerted itself. So that is very, very strong. When we see a large overlap, it means that the market just didn't feel the urgency really to act. Certainly we're going up, and that's not a bad thing, but it's not as good. So this is less preferred, and this is, let's say, more preferred. Okay. Buy, hold, or sell in this one. I can't buy it. Honestly, I can't hold it either, but it's not a sell. Let's look at the second request here, which is Solana. Now, this one certainly has been getting a lot of headlines as the big Ethereum killer. That was until around here somewhere where they had an outage, and they haven't really recovered all that well from that outage. Look, it's one of those, either you're a hodler or not, you're a true believer. Hodler is H-O-D-L-E-R, and it's a deliberate misspelling of holder. It's a common term in crypto parlance. Buy, hold, or sell, it's not knocking my socks off. I can't see any excitement in this one at all until we see some white candles coming back in. But even then, the excitement was fairly short-lived. I'm looking at that one. I'm looking at that one. So, yeah, look, I think if you're a long-term hodler, I think there's enough in it to hang on to it because it's a really interesting project. But if I'm a trader, I can't see any reason to buy this right now. Or even if you're a short-term trader, I can't see any reason to even hold it right now. Not to say I'm necessarily a seller or a short seller. I don't think you need to be in this one. So it's a pass for me on that basis. What would we need to see, to get excited? Well, we're at the short-term trend zone now, so it's something that looked like this, but with some clean candles. See all these upper shadows? See all these upper shadows? They're just dirty. They're dirty candles. We want to see some clean candles coming in. And that may be a ways away. So I wish I had better news for you on those two, Hamid, but I'm a pass. Whilst I'm looking at cryptos, the couple that I think, well, look, I thought it looked pretty good until a couple of days ago, but that was building, Polkadot, but last few days haven't been great. Look, it's still holding above its short-term trend zone. I think that's encouraging. but again, I'm kind of grasping at straws a little bit here. The other one which does look interesting, if I can find it here, is Harmony One. You can see the strength of the trend straight away in comparison to Solana. At least it's sort of angling in the right direction. Yeah, I'd definitely watch that one maybe on any sort of pullback into that light green zone. That one's probably worth investigating a bit further. Other than that, most of these alts have gone a little bit quiet, unfortunately, and it's on the basis that Bitcoin really is sucking up a lot of the market's attention at the moment. So what we're looking at here is Bitcoin market dominance, which is now over 45%. When I looked at it a few days ago, it's now at sort of close to 46% at the moment, and it is getting a lot of the limelight at the moment, and a lot of those alts are looking a little bit woeful. But that generally swings around at some stage where the money starts to, Bitcoin generally sort of finds a level where it starts to stagnate a little bit. I don't think we're there yet, but probably not far away, around 60,000 perhaps. And then some of the altcoins get a little bit of love. But we could talk about cryptos all day. We won't do that. I'm looking at time. We need to move on. So let's head back to stocks and pick up with Argosy Minerals, ticker code AGY. This one is for Peter. Short-term trend looks great. Long-term trend looks great. If there's any disappointment here, and you can probably sense in the tone of my voice, is that the last few sessions, let's face it, haven't been great. But it's been in a pretty ugly market, and unfortunately, when markets get like this, investors go risk off, and some of these little ones tend to stagnate. I think there's a great case to hold it, though. Looking at those trends, I don't think you need to panic too much. If we start to get below 17, I'm getting a bit more concerned, because then we could be in one of those, moving below the short-term trend scenarios. But look, for now, absolutely a holder. I'm not a buyer, just on the basis that we're lower peaks and we just don't have the right candles. We need to see, and I keep drawing it, but it's the one you do need to keep seeing at some stage in these light green zones, is the candle that looks like that. So for now, it's a hold. It's not a buy, and I certainly wouldn't have any reason to sell it either. The last stock pick today is Wesfarmers, and this one is also for Hamid. He's been busy today, and it's looking a little bit shaky here, unfortunately, for Wesfarmers. We can certainly see lots of evidence in the past, can't we, of how powerful this long-term trend zone is, just how reliable it can be, not to mention, also short-term trends and how reliable they can be also. But we do note that trends end, short-term trends end, and eventually long-term trends end as well. We saw that earlier on in BHP. They tend to end in very similar fashions. So we get down, we test the zone, we don't really bounce off that zone. We sort of have some time here, then we move through the bottom of the zone, then we try and get back above it. And maybe let's zoom in here, and let's look at this price action here, where you can see we are now being resisted by the zone. So we've come into the zone with lower peaks and lower troughs, not a great sign, and we are now being resisted by this zone. There is every chance that Wesfarmers now moves into, unfortunately, a more protracted downtrend. Where could it go? Well, there is plenty of support down here, and I think if you're a long-term self-managed super fund holder, do you play the game of selling it right now, selling it at 54 and saying, look, I'll have another look at it at 50? Because if you're a technical trend trader like me, you couldn't buy it at 50 anyway. You'd have to wait for it to create some sort of pattern like this. You'd have to wait for it to hit. So imagine this is happening at 50. So we get to 50, and then we start to do something like this. So imagine this pattern here is happening in that zone. And I'm not sure if that's worth it, but I'll let you make that decision, because I do think the balance of probability has swung to this one moving lower, but not a great deal lower in the medium term. Is it a buy? No, it's not. Is it a hold? Probably not. Is it a sell? I'll leave that up to you. Let's get a fundamental reader for Wesfarmers now, and let's decide what our correct PE target is going to be. Like I said, I usually default with the median of the future estimates there, but then I do go back and say, look, is this a cyclical stock like BHP? Should it be held to some other measure? How different is the future from the past, and would I feel comfortable paying that sort of a PE for Wesfarmers? These are all of these considerations, and as I said, fundamental analysis is very discretionary. I can't see that the future ones are all that different from the past ones. Honestly, they're not that different, and you could go with one or the other. I don't think it matters. And the average is 25, and we're using 24. So let's leave that, because I think it's appropriate. I think it's entirely appropriate. I don't see why you would rate Wesfarmers at anything higher than low risk, to be honest. Let's look at the broker's assumptions. Are they reasonable? We know Wesfarmers had a great year in FY21. And we know that maybe there's a little bit of a retail hangover in FY22, but then some, high single-digit growth, which is typical of Wesfarmers. I mean, that is their long-run average growth rate is somewhere around that 8-9%. So these are all very reasonable, all very sensible assumptions, I think, for Wesfarmers going forward. I would not change that at all. What do the brokers think? Well, the brokers, we've got one strong buy, one buy, 7 holds, all sitting on the fence at the moment, but a few sells, and that's a little bit concerning to see 4 brokers out there that don't like it. Their average price target is 57.66, which allows for around about 6% upside. My price target would be, say, closer to 51.54, so maybe not as generous as some of those brokers are showing at the moment. But yeah, look, I wouldn't necessarily say that that target is completely wrong either. So look, I think on the basis of what we can see here, Wesfarmers not particularly cheap at current levels, not screaming value here by any stretch of the imagination, and the chart's not exactly, not exactly lighting the world on fire either. Incidentally, we said it could come back to around about that $50 level, which coincidentally is basically my fair value target for it anyway. So I don't think anything here changes my view of Wesfarmers, that we're probably going to see a little bit more short to medium term pain before we could even possibly contemplate it making that long-term trend turnaround. Certainly anytime soon. Well, that's all of the viewer picks. Let's have a look at my shortlist of today's ASX stocks. So I run a log scan each day. And I come up with, in today's scan results, if we click on those, probably 100 stocks came up on the long list that are in uptrends and, or may not be in uptrends yet, but that uptrend is just starting to turn. But certainly, short-term trends look good and candles look good. So that's what the scan's trying to identify. And then I literally go through every one of these and click through them, much like I'm doing now, and I literally probably actually go through this fast, and then I right click and put them in the ones I like in the shortlist. And not to say that there aren't others that I thought looked really good in this in that scan list, but these are the ones I thought maybe warrant a bit more urgent attention than some of the other ones, and the other ones will appear eventually if they're good enough. Acrow, Formwork and Construction Services. I did a valuation on this the other day and it came out pretty good. It was sort of around that 60 cent mark. So I think there's a bit of fundamental upside here, and the chart looks like it's starting to turn around because this long-term trend is starting to get in the right direction. We've held it a couple of times and moving back to the upside, and we've got a fledgling little short-term uptrend here with some nice candles. So I think it's one to keep an eye on. Would I run out and buy it today? I don't mind it, but maybe if we saw something that looked a little bit more like that with a nice little white candle here, if you wanted to pick it up a little bit cheaper. Otherwise, yeah, look, I think it looks fine at the moment. Adriatic, I think, looks amazing. If the other one looked fine, this one looks amazing. That is a very pretty picture. Beautiful short-term uptrend, long-term uptrend very much intact, very well established. We can see, it's doing all those things we like to see a long-term uptrend do. Holding, and now we're starting to accelerate, I think, towards the far right of that screen with some really nice candles. I like to see lots of those white candles in here more recently, and I think it all looks good. Nice little pullback to 317, hold and going again. I'm happy to buy that one right now. ARV is the next one. This is Artemis Resources, and more of a turnaround place, certainly not bottom left, top right, but we can see that we are moving back above the long-term uptrend, and then we like to see a hold of that long-term uptrend. So the long-term uptrend is no longer resisting prices from going back up, but it's now starting to support prices on this side. And I think that looks really good. I like the candles. It's had a bit of a pop here to 10. Maybe you might even get a pullback into 9. But look, if you wanted to try and get it cheaper, whether you play that game or not, I'm not sure. I'm probably just happy to just go for where it is. Australian Strategic Materials Limited, great name. ASM, certainly a great long-term uptrend here. So pretty happy with the way that's going. We have moved beneath the short-term trend zone, and that's a little concerning. So I think maybe this one needs just a little bit more cooking until we're confident about it. But it is shaping up here as, with higher peaks and higher troughs again, so that's encouraging. Right, so we can move into higher troughs, and then perhaps let's just wait for it even to close above this little level here before maybe we take the next nibble at this one. It looks quite prospective, that one. That is ASM. Next one is Bannerman. Again, we should see the short-term trend zone act as support. If that is going to be support, we should see some nice white candles come in and higher peaks and higher troughs resume, and that's certainly the case in what is a well-established long-term uptrend that appears to be doing all the things that we want a long-term uptrend to do. So happy to buy that one at current market prices. Not dissimilar here, Beamtree Holdings. It wasn't great that we got below here, but I do like this move, really decisive move back to the upside, and then holding the short-term trend with a nice candle today in what is otherwise a pretty lousy market. And as we say, long-term uptrend, doing all those things that long-term uptrends like to do. Next one is Blue Star Helium. Certainly a specky here. This is not a self-managed super core holding, is it? Of course. Trends, long-term trends changing, short-term uptrend well established, sort of pulling back into that zone, and maybe with a nice white candle just to kick us off again is probably the way to play that one. But otherwise, sounding it out, looks pretty good. Cannindah Resources looks amazing, and I only put this one in here just to illustrate the fact that there are companies out there that I'm looking at, but I wouldn't necessarily buy right now because they're so far away from my value zone. And this will continue to trail higher, but my style is to try and find these pullbacks to the value zone with some nice candles so I can get a little bit of discount in that trend. But otherwise, it looks very good. So it's probably just a wait and see on that one. Elementos, maybe looking for the same thing there, but otherwise, I think that's very, very strong. Just wonderful trends, and again, it's just doing what it's supposed to. So happy to hold that if you've got it. And look, I'd definitely be looking for a buy point if you don't. HTG, which is Harvest Technology, and it's made a nice base pattern through here. And I think we have based out really well at that long-term uptrend. And I'm liking the fact that we're starting to move back now into higher peaks and troughs, and areas which were sort of impeding price movement in the past now appear to be supporting price movement, and we're seeing these short-term and long-term trends re-establish themselves. So that one looks really interesting at the moment. KGL has moved away from the value zone, but I do like this big move. I mean, a lot of people balk at big moves like that, but I'd like to see them because it tells me there's something going on here. I don't necessarily run out and buy them, however. I prefer to wait for a bit of a pullback and let some of these trends catch up. But it's one that's on the watch list now. Just going to keep an eye on that one. Lifestyle Communities. Now I mentioned one before. I can't remember what it was. Not a super fund type of stock. This one is a super fund type of stock. So core portfolio holding. Really great fundamental picture behind this one as well. But just a beautiful trend to match, and lots of white candles there at the end. And really happy with just the way things are going here. So Lifestyle Communities, LIC, Liontown. Look, it's certainly holding in here and doing all the right things, but not rushing out to buy this one just yet. Let's see how it goes in here. And if we get some nice white candles building in here, that's probably the way to go. It is looking at the moment that we've got enough supply in here to maybe just cause us to go a little bit sideways for the time being. But it is a highly prospective chart and worth keeping on your radar. MA Financial Group, once again, doing all the right things here in terms of the short-term trend zone, acting as support. We've got nice white candles coming in. It's a terrible day in the market today, and we saw a great day on this one. I should say that this is an intraday snapshot, so it may have changed by the time you're seeing this. But otherwise, the long-term trend is looking very, very strong as well. I'm happy with that one. MetalsX looks really, really good too. Short-term uptrend, long-term uptrend. Nice white candle today. Happy to go into that one at market. MRM, which is MMA Offshore. It's a little bit of a specky one, sure, but it is looking like it's turning the corner. There's a bit of volume coming in here, so it tells me that there's a bit of interest coming into the stock. And definitely in the specky bucket, but worth keeping an eye on. I think the candles look pretty good there. Orthocell, maybe it's a little bit early days on this one. Let's just see how it goes in this sort of a pattern here, and maybe that's your entry point there. Okay, but sounding that one out, as I am sounding out Piedmont Lithium, similar style, isn't it? You can see there's a lot of similarity in some of these. So what I'm targeting here is this pullback and hopefully a hold of long-term trend zone. A little bit early though, because it hasn't yet proven itself, but you know, I'm happy to buy it at 85. I'm happy to buy it at 90 if it's done the right thing, but I'm not happy to buy it just yet. So it's just a matter of, you know, I'd rather pay more, but with more certainty than I guess just rushing in. So something like this, and then maybe, you know, looking for how it responds in and around that zone. But certainly putting that one on the watch list at the moment. This one is Sweet Mining. I think that's in that same boat as Canada. Looks fantastic. And look, it was literally like a little, you know, tick, 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 boom here. And maybe you'll get another chance coming up. So keep an eye on that one. I think that one looks very interesting. VMY, I know a few people have been asking me about this one on Twitter. I haven't got back to you on it, but here I am. I'm getting back to you now. Look, I think it looks fantastic. It's certainly one of my top picks in this list today. I do like the short-term uptrend, how that's holding through here. I meant to draw an arrow there. And I do like the fact that we are moving back into higher peaks and troughs with some nice white candles towards the end here, telling me there's accumulation. We've had some excitement here. Volume's dying down, which is good, because it means we've got a lot of the supply of the system. And the demand which remains, and there is demand, I can see it, because look at those white candles, is meeting less supply to impede it to the upside. So that looks very, very good. I'm happy to go in on that one right now. And Viva Leisure, this is probably more of maybe one of those self-managed super fund style picks as well. But it is a nice turnaround here, and you can see that the long-term trend zone, I'm like a broken record, aren't I? Has stopped impeding prices and now looks to be supporting prices, and we've got a nice short-term uptrend there, catching up with some great candles and breaking through a nice little resistance zone there. So I do like that one. Viva Leisure, that's a nice reopening trade there as well. This is the gyms. And last one, but not least, West African Resources. Massive pop through here. Always gets me interested. I'm not necessarily going to run out and buy it because it's too far away from my value zone. So I do want to see this come up and potentially this come back to meet it. And somewhere around here, I think, is where we're going to get our entry point, but just sounding that out. So a bit of a mix today in terms of some that are ready to go. I told you what they were, some which I'm just throwing at you for now, and we're going to just wait and see if they do the right things. I'm sure we'll recover them in future sessions. Don't forget, we've got plenty of great content for you at Think Markets. These are all of our webinars. Head to that address there and make sure you register for each of these. Next week, I'm going to be doing CFD Trading Made Easy. Back to Ask the Experts, the live session there where you get to ask me about anything in your portfolio on the 26th of October. And of course, all the others there you can also investigate. And of course, we're not just about helping you learn more so you can earn more at Think Markets. We do have a great trading platform and an incredible value proposition there for our ASX trades, just $8 flat rate. CHESS sponsored, which is really rare in this industry right now to get such a great rate that is CHESS sponsored, in addition to a huge range of markets. You can trade shares, commodities, indices, cryptos, forex, anything you can think of, you can find in our platform with 24/7 customer support and our world-class trading app. Head to www.thinkmarkets.com.au for more details. And of course, it would not be a YouTube video if I did not ask you to subscribe and, most importantly, hit that like button. Don't think about it, just do it, because it tells us that you like the content we're creating and that we need to create more. Well, that's it for me today, everybody. Hopefully you got lots out of today's session. All the best for your trading and investing until we catch up again. Bye-bye for now.